Okay, we're going to start off with gold today. I've got the 1 minute chart on gold, and you can see a real sharp drop in gold just after 9 a.m. London time, just after 4 a.m. New York time. London time, 9 a.m. Gold drops $12 an ounce. And I have the volume at the very bottom. The volume is very interesting here. Right, look at the volume. You can see that the volume is just a huge increase in volume. And it's about $2 billion worth of gold trading in 1 minute. And the suggestion from a lot of folks is that this is a trading error. This is a mistake. What often happens, and here it is, just remember, it's Monday morning, right? And the feeling is that somebody placed an order that may have been 10 times or 100 times larger than they intended. Sometimes somebody puts an extra zero or two or puts the decimal in a wrong place, and they accidentally move the market. And here gold moved $12 per ounce in 1 minute, basically on one trade at the London Open. And the point is, well, is it possible that somebody wanted to place an order that large? It's possible that somebody wants to place an order that large, but if you have an order that large, it doesn't make sense to place that order all at once, right? Because if you're selling, you want to sell high, correct? The price is at $12.54, and if you hit a huge sell order at market, you push the price down and you're getting filled. You're getting filled at $12.54, $12.52, $12.50, $12.48, $12.42, $12.40, $12.38. Way down at the bottom of that wick, you're getting filled. And then you're getting filled at $12.40, $12.42, $12.44. So you're getting filled. If you're selling, you want to sell high. So you shouldn't sell at market if you have a large order. Now, it's possible that the person who was selling misjudged the liquidity of the market. Perhaps this person believed that he or she could sell at market and that the market could absorb the entire order. Okay? So that would be a judgment error. Or it's possible that the person simply sold more than they intended to sell, which would be a trading error. If you wanted to sell 100 ounces and you accidentally sold 1,000 ounces, or if you wanted to sell 1,000 and you accidentally sold 10,000, that's a trading error, right? Because you accidentally placed too many zeros or you put the decimal in the wrong place. So you have trading errors, you have judgment errors. What should you do if your order is too large for the market? You have to work the order. And what does it mean to work the order? That means instead of selling the entire position at market, you sell a little bit at market and you wait. If you notice that you're pressing the market down, you cancel the order. And you allow the market to come back up. And now you sell a little bit more. And you sell a little bit more, right? And you don't sell the entire position at once. Because the idea is to sell everything and try to get filled at $12.54. Try to get filled at the current price. You don't want to smash the price down and get a bad fill. Now, believe it or not, this could happen to you. It's not going to happen to you in the Forex market, but if you're trading stocks, for example, there are stocks that you or I could accidentally push down if we're selling or push up if we're buying, if that stock is not particularly liquid. You or I have the power to do that. Currencies, probably not going to happen, right? Commodities, it's not going to happen with gold or oil, but it could happen in some of the more thinly traded commodities. So just be aware of this, right? Be aware that it happens. And that way it won't happen to you. This is more likely to happen on a holiday. This is more likely to happen during the summer. In other words, this is more likely to happen at any time when there are fewer people around. This is more likely to happen on a Friday afternoon, right? Any time where there are fewer traders around. That means the market is thinner, and that thinner means there are fewer buyers and there are fewer sellers. Anytime that the market is thinner, there is a chance of accidentally moving the market. This is a bad thing, not a good thing, because it means if you're buying, you're going to pay more, and if you're selling, you're going to get less. In this case, the trader was selling, and the trader got less, right? The price then bounced back. And I'll tell you what, why did the price bounce back? Because some other traders probably recognized what was happening and said, look, somebody is placing a fat finger order. That's what they call it when somebody's accidentally moving the market, and they see it as an opportunity. They're saying, look, gold is being pressed down. It's $20 cheaper all of a sudden. It's probably going to bounce right back. Let's buy it. Right? It's a mispricing. It's an error. And let's buy it cheap here while we can, because it's probably going to bounce right back. It usually does. By the end of the day, it'll probably be back to $12.54. Right now, it's gotten back half of what it lost. It's at $12.44. It got down to $12.37. It's back to $12.44. So it's coming back. And if I wouldn't be surprised at all if it made it all the way back or almost all the way back. The thing is, we don't really know if that person did have a big sell order or if it was an accident. But there certainly was an error in judgment at the very least. Okay, that's what happened with gold today, in case you're wondering. Is it an opportunity? It certainly was an opportunity. Whether it's still an opportunity remains to be seen. Okay, let's move on. Now, if you have any particular currency pairs you'd like to take a look at, we could certainly do that. Please feel free. Also, another thing that could have contributed to this is we are coming to the end of the second quarter. Today may have been a rollover day. Could have been confusion regarding contracts. And that may have played into this also. Let's take a look at oil since we're looking at commodities. Now we'll take a look. Let's go push back to the daily here. On gold. This is what we call a continuous contract. That does not look like a great chart, does it? Get rid of these lines here. Could that be a double top? Once, twice? Is that possible? It could be. Could be a 1-2. And CL. Man, oil. During our last session, by the way, we did a setup for Euro Pound on a pennant formation. This could be another bear flag forming here. Do you see this right here? This is what a bear flag looks like. Here's your flagpole. In other words, the bears are in charge. And here's your flag. The flag is the bulls trying to fight back and really failing. Trying to fight back, but really not getting the job done at all. And you know what? It looks like another bear flag is forming. How does this usually resolve? How does this usually end? This usually ends lower. This usually resolves with the price falling. So here is a great example. This is a textbook example of how it's supposed to work. The bears have a huge red candle, which tells everyone that they are in charge. Now the bulls have a chance to respond. The bulls have a chance. What will they do? Will they respond with a big green candle? No. In this case, they just have some weak little green candles, which means they have no response. You'll notice that these 4 candles can't even make it to the halfway point of the big red candle. And the bulls run out of gas. And then just one more red candle destroys all their work. Everything that they tried to put together for a little rally is wiped out with one red candle. So typical, right, of a bear flag. And why do I bring this up? Because look what's happening again. Another big red candle, followed by little green candles trying to fight back. Will this resolve the same way? It could. It very well could resolve the same way. Let's see what happens. But it doesn't look good for oil. It doesn't seem as if anything, it doesn't seem as if the oil bulls can get this thing moving in a bullish way. So, right? Bearish, strong, bulls are weak, bears win. Bears are strong, bulls are weak. What is the most likely outcome? Most likely outcome is that the bears will win again. The winners tend to keep winning. That is the essence of trending. And if you look at this chart, it is very much a trend. We've gone from the low 50s to the low 40s. And look, I don't know how far it goes. We do have some support nearby, right down here. I think it's just under 40. But it's just been a rough ride for the oil bulls. And for anyone who kept buying the dips thinking that, well, it's over. It's almost over. The bad stuff is almost over for oil. And it just has not worked out that way, has it? Okay. I want to take a quick look at the COT reports. We haven't looked at those in a long time. And new ones came out on Friday, new COT reports. So we're going to take a quick peek. We'll start with the euro, which has been very quiet. And not surprisingly, euro is fairly evenly balanced. 167 to 122. So not a lot of motion, not a lot of activity, and not a big imbalance between long and short. I show 167,000 contracts short, 167,000 contracts long, 122,000 contracts short. And so that's really close to 1-to-1. No big advantage here one way or the other. You'll notice that the shorts have really been adding to positions, and that has caused us to really balance out here on the euro. So if you look at the chart, that matches up with what we've been seeing, which is really just kind of a drift here. We do have a lot of support. You can see the arrows. Support has definitely formed up here, right around 111. We'll take a look at Kiwi in a minute. Carlos, thanks for that. I do want to look at that. Euro has formed some support at 111, but it's just not that much going on. Let's take a look at the pound. Pound, the shorts outnumber the longs, but it's not quite 2-to-1, 88,000 versus 50,000. So not quite 2-to-1. Shorts outnumber the longs. Again, not a huge imbalance there. What about the yen? Here we go. Shorts 89,000, longs 39,000. Here we finally get an imbalance of greater than 2-to-1. Folks who are short the Japanese yen. I like this because I'm thinking of going long the Japanese yen. And I see that those who are short the Japanese yen understand that those are future buyers. Anyone who's short the Japanese yen is going to cover someday. So if the market's already short, that's good for me because I'm going to become a buyer in the future. I would like to see a greater imbalance. I would like to see a 4-to-1 ratio, but I have better than a 2-to-1 ratio. So I like this. What else can we look at here? How about Aussie? Well, let's go Swiss franc here. Swiss franc almost exactly 1-to-1, 14-to-11. So that really doesn't help me at all. In this game, I like to see the bigger the imbalance, the better. Aussie, 42 long versus 27 short. This would favor the shorts, but it's not quite 2-to-1. So it's not a huge imbalance. And New Zealand, long to short, 38-16. And you can see that most of that is very recent. The imbalance just in the past week, longs piled in to the tune of 11,000 and shorts closed their position by a rate of 8,000. So this is very recent. That's actually bullish when it's recent. So you don't want to go against that. You understand that this is all within the past week that this imbalance occurred. It's only 2-to-1. You don't want to go against a recent imbalance. And let's take a look at the chart on this one because Carlos says Kiwi's attempting a new high. We said this was the strongest dog out there. We wanted to buy it on dips. The problem is finding the dips. Finding the dips can be tough. Here's our setup. It's hitting the second target. The problem is it never came down to our entry. We actually had 2 entries for this. We could not get it to come down for our entries. And there it goes, going for a new high. It's up inside of resistance now, which is why this was a target in the first place, right? Now, I do believe there were intraday entries that occurred here. If you go to the 60-minute on this, and Come on, New Zealand dollar, 60-minute. Let's get that chart going. I think we had comments out of the RBNZ that might have caused this to take off. But yeah, look at that thing go today. I think also this may have jumped a little bit on that durable. The dollar slid on that durable goods number this morning. Did not help the dollar at all. But yeah, a couple days ago, there were some comments out of Reserve Bank of New Zealand. They said they were going to remain accommodative for a considerable period. Said, hey, we're not going to raise interest rates. There's our buy signal. There's your most recent hourly buy signal. What a buy signal right there. That's way back on the 15th. Man, I wish I'd have bought that one. Look at that. On the hourly. They said a few days ago that monetary policy will remain accommodative for a considerable period, which means, hey, we're not going to raise interest rates, gang. You know, and I believe that where they said it is right here. You see that where that huge candle with the big wicks? I think that's right there where they said it. So they kept their interest rate at 1.75. That's a record low for them. And they said, hey, we're going to stay accommodative. Some folks, if they went to the 15-minute, there was a buy signal right there on the 21st. But that was right ahead of the RBNZ. You're probably not taking trades right ahead of the RBNZ. Because look what might have happened. If you took that, there was your buy right there. If you took that buy, you might have got stopped out on this, right? It's a good chance you got stopped out on that. That's some craziness right there on your Reserve Bank of New Zealand meeting. So generally speaking, I'm not taking trades right ahead of a central bank meeting. All right, but there's a million different ways to trade this, just buying pullbacks to support, a lot of different ways to trade it. But wow, I think that it definitely got a boost ever since the Reserve Bank of New Zealand said, hey, just not looking to, whoops, there's the opening bell for the New York Stock Exchange. They are just not looking to raise interest rates anytime soon, which is, you know, you would think, I mean, it's kind of interesting because other countries are, right? Canada's raising rates, U.S. is raising rates. And news like that, you would think would depress New Zealand dollar, and it certainly did shoot down, but then it came right back up. And now it's certainly overbought. There's no way I'm shorting this, though. I don't care if it's overbought. There's no way I'm shorting anything that's in an uptrend. And this is definitely in an uptrend. You don't want to short anything that's in an uptrend. Look at it go. Very strong. So the key here is just trying to find an entry. Right? That's the tough part. All right. So that's the hard part. I think Aussie has been a little bit more forgiving. Yeah, can't chase it. Carlos says he's not going to chase it, and I couldn't agree more. Aussie's been a little bit more forgiving. It hasn't been quite as much of a rocket. You get more pullbacks here, but it's still definitely an uptrend. So I think maybe Aussie's the way to go if you're looking to buy, because it's strong, but it's not as strong as New Zealand, and therefore you're getting pullbacks, you're getting opportunities to buy, and that's a good thing, right? So it's like look at that. Like there's just a lot of support right there. You see this right here? There's like, this was resistance, that Fibonacci. But it's also was resistance, and then it becomes support. I wonder what it looks like for RSI as well. There you go, right there. It's got you buying in this area too. As long as your stop's wide enough, you're okay, and you're taking advantage of that little pop. So Aussie might be a little bit more forgiving in terms of giving you entries. Speaking of, right? Remember this century? I almost forgot. Look, what a thing of beauty this one turned into. Aussie yen entry, right, at 82.83 with a stop at 83.45. Now, we're not stopped out because the low was 83.72. So it missed us by close to 30 pips. Then on Friday, hits the moving average again. Doesn't even really come under it. And then today hits it again. But look where we are now. We bought this at 83.82 on Thursday. And right now, we're at 84.64 for a gain of 82 pips. Well, that's better than a sharp stick, right? That's better than getting poked with a stick. 82 pip gain so far. The 10 EMA was money, says Carlos. Yes, indeed, right? That I almost forgot about this. Right? Sometimes it works pretty well. I mean, sometimes it doesn't, sometimes it does, but it never results in a large loss because you've always got the stop in place. So where's the stop now? The stop now is based on the most recently closed candle. That's here. Moving average as of Friday's close is 83.90, and ATR ATR is 69.89, so call it 70 for the ATR. Half of 70 is 35. So if the moving average is yesterday's moving average, 83.90 minus 90 minus 35 is 55. The stop was 83.45. Now it's 83.55. So we get to move the stop up, and we're up 80 something pips on this trade. And if I feel compelled to get out of the trade, I can close half of it, and the other half I'm just going to keep trailing that stop along. Okay, so we'll just keep updating this as it goes. And we hope that it just keeps going for a long time. That's the best case scenario right there. All right, so good times. Good times to be had right there. I love to see that big green candle right on that moving average. Aiming around 85, 20, 60 area. Yeah, I like that 85, 40 area to sell short, actually. Well, I certainly am going to take at least something off the table at 85, 40. For sure. So let's see what happens. Okay. All right. I'm out of here. I'll see y'all tomorrow. Everybody have a wonderful day. I believe I'm back with you tomorrow. Have a great day. Take care.